Singapore-issued government bonds as well as short-term Treasury bills are set to gain more interest this year. Experts say these low-risk investments are attractive amid the pandemic since it's very unlikely that the government will default on payments. These products will appeal to investors preferring lower risks but still want to make some returns. Parliament yesterday increased the issuing limits of such products to cater to growing demand. Brennan Taneto explains.
The interest in Singapore-issued government securities was about double in demand last year, amid a turbulent global economy caused by the pandemic. Experts say that's due to the country's perceived economic stability. They add that the lower interest rate environment means more people are likely to take their money out of banks and invest them in government securities like the Singapore Savings Bonds, which typically has more competitive rates. The low entry rate to invest in this product, a minimum amount of $500, is also appealing.
There is every likelihood that investors would view the government securities issued by Singapore as a relatively safe investment, certainly compared to the equity investments and fixed income investments in Singapore and in a number of other countries.
So Singapore is one of the only 10 countries in the world that is enjoying a AAA credit rating, meaning that the default rate of such government bonds issued by those countries are extremely low.
But experts point out that lower global interest rates could lead to a slight drop in bond yields going forward.
As a result, new buyers of Singapore government bonds are receiving a much lower coupon compared to the same time of last year. However, compared to other markets such as European bonds and Japanese bonds, which are already trading at negative yields, Singapore government bonds are still offering decent rate.
The Singapore Savings Bonds allow investors to withdraw their investments at any point along the 10-year maturity period without any penalties. It's not the case for Singapore government securities bonds that offer longer tenures. There's also Treasury Bills or short-term bonds that are offered at a discount but do not pay any interest.